This is a journey into money. Loads of money.
Hey everyone, this is just going to be a kind of response video to a really popular video that's going around. It's not that I disagree necessarily with everything in the video, it's just I figured I would point out some inconsistencies, and there's one major thing I do disagree with, but I'll go into more detail in later video. So let's just get into it.
A few questions. Will a teacher in my district who buys pens, pencils, paper for his students be able to deduct these costs from his tax returns under this plan?
H.R. 1 would repeal the above-the-line deduction for teacher expenses.
Will a corporation that buys pens, pencils, and papers for its workers be able to deduct those costs from its tax returns under this plan?
The general deduction for ordinary and necessary business expenses by any business entity is not changed, so it need not be a
So they would.
But yes.
The first thing I want to say is I find it incredibly ironic that the same people that were probably bitching about the idea that corporations were ruled as people also are now bitching that corporations are being treated differently than people. While it is unfortunate that teachers have to spend more money on their own supplies when in reality the school should be paying for it, making it tax deductible only incentivizes them to spend more money than they otherwise would on these supplies. It would be better to simply give them an income tax break across the board, which is basically what this plan does. If you look at the actual tax reduction that teachers get, it's more than the amount of money that they would have been spending on school supplies. And I know that 3% cut has to account for more than just those deductions, but the point is that it's a lot more complicated than we're going to make teachers pay more money for school supplies. People also tend to forget that corporations aren't just enormous companies that span the globe. Small businesses would also benefit from these kinds of deductions and lowering of their corporate tax rate. In the next portion of the video, she talks about using local and state sales tax to deduct taxes. I actually agree with her on this, or at least I don't see any particular reason why a corporation would be able to use these deductions and a person shouldn't. Either both should be able to deduct it, or neither should be able to, in my opinion. However, it's entirely possible that I could not be aware of why they're doing this, and I only say that because I am very certain that most people are not aware of what kind of bullshit she's trying to spin in the next part of the video that I'm going to play.
Will a homeowner in my district be able to deduct more than $10,000 in property taxes under this plan?
Real estate taxes under H.R. 1 would be capped at $10,000.
Okay.
Itemized deduction.
Okay. Will a corporation be able to deduct more than $10,000 in property taxes under the plan?
Again, under the same rule I was describing as ordinary and necessary business expenses, the taxes attributable to earning income would be deductible, so the short answer is yes.
The entire point of this video so far is to basically insinuate that the rich people who own corporations need to be paying more taxes relative to the middle and working class than they currently are. And not only does this plan not do that, but it does the opposite of that. It's why in her first two examples she talks about a teacher and a firefighter, which are members of the middle class. However, this next part of the video pretty much shows that she's betting on the fact that most people have no idea how much they actually pay for property taxes, and they have no idea how this is calculated. As I just said, her first two examples are of a firefighter and a teacher, both of which are not known for making a whole lot of money. Then she slips in this factoid about property taxes and is hoping and assuming that you will think that this also affects those same kinds of people in the same income level, which it most definitely won't. Or at least it won't the vast majority of the time. And you can see this as it's listed by the highest medium value that people have to pay on taxes by state in the United States, and even the highest in New Jersey is not $10,000. Pretty much no one will pay even remotely close to $10,000. Another thing that's kind of ironic is that most of this criticism is coming from the Democrats, who more generally believe that the government should have higher taxes in order to pay for certain things and provide services to the poor. And yet when the tax code is getting changed to affect primarily blue states, you have to go all the way down to Wisconsin before you see a state that was red in the 2016 election on this chart. And so when the tax code gets changed towards maybe being a little bit more towards that, they're complaining about it. So that doesn't really make a whole lot of sense to me. And another thing they don't really want you to know, which you can tell if you know anything about how they calculate property tax, is that this will pretty much affect absolutely no one who is in the middle, even the middle class, because the way they calculate it is, so you know how you have a market value of a house. That's basically, the market value is what you actually see when you see a for sale sign and how much they're selling it for. That's the market value. And then after that, they have an assessed value, which is basically a elected official that is an appraiser, a real estate appraiser. They determine the value of houses, gives a rough estimate of what they believe should be the taxable value of the land. And sometimes even the taxable value is lower than the assessed value, so it can be even lower than that. And generally, the assessed value is almost half, and sometimes it's more than that, but it can be up to half as much as the actual market value. So as you see on here, the effective real estate tax rate is the actual average across the country is around 1% or 1.1%. So in order to even be affected by this $10,000 cap, you would have to have an assessed value of a house that's $1 million, which means the market value of the house would probably be like 1.2, 1.5, even up to $2 million, depending on the area. And there's just absolutely no way someone in the middle class will ever be affected by this unless they inherited an enormous fortune of a house. Even then, how much you save still disproportionately affects the rich. This is because how much you deduct on taxes, the actual amount that you get back, is whatever your income bracket level is times that amount. So even if you're deducting $10,000, if you don't have a very high income, the amount you'll get back is lower than if someone had a very high income and they were paying $10,000. The people who benefit most from this, generally speaking, are the rich. This is because they're able to get more money back. The last part of this video, I don't know enough about to comment, but the fact that she's blatantly misrepresenting something that I actually know she's wrong about doesn't make me want to give her the benefit of the doubt in areas that I'm not quite as familiar with. Thanks for watching. The links in my sources are in the description, and please shill this video because I'm trying to get more subscribers.